Good morning, all you magnificent melon heads out there, and happy Friday, everyone. Man, this week went fast. Today is February 23rd, 2024, and the top story this morning is the futile gesture of all the Fed governors yesterday trying to jawbone this market lower. And I guess, well, they just didn't get the memo, and that memo is one word: Nvidia. Yesterday, we had three different Fed governors, Jefferson, Cook, and Waller. All were out there giving speeches. Now, the messaging varied a little bit, but it was consistent. Wait on rate cuts. They're coming, but you're just going to have to wait. March, done. Not happening. No chance. Odds of a March rate cut are now like low single-digit percent, like 2% odds of a rate cut in March. Even May not happen now. The odds of a rate cut in May are now less than 50%. It is unlikely we even see a rate cut in May now. And even June for a rate cut, it's a probability now, but you've got only about a 66% chance that we get our first rate cut in June. So this market ran like the blazes late last year because Powell got a little dovey and said, yeah, we might start cutting rates early next year. Market sees that and hears 7 rate cuts in 2024 and goes up every day. Now the Fed is saying, no, that is not happening. You'll get a few, maybe 3 if you're lucky. Market doesn't care. All they see is up. So was this monster bull market built? Is it predicated on the end of the Fed's tightening, which if you go back and watch that interview I did with Joe Brown a few days ago, the Fed never really started tightening because financial conditions remain very loose. And if so, if this whole rally has been predicated on an end of tight monetary policy, then the fact that that policy is sticking around a little bit longer should be enough to send the market lower. Emphasis should. But this is not a market that cares what things are worth. This is a market driven by imbeciles who only know how to dump their money into markets that one day is going to pull off the mother of all rug pulls. And then everybody's going to be sitting around saying, what happened? Oh my God, my stock, help. Case in point, Supermicro yesterday rallied almost 30%. Supermicro announced that they were diluting their shareholders by issuing $1.5 billion worth of convertible notes, i.e. bonds that can be turned into stock. They're diluting shareholders, and the stock rallied almost 30% yesterday because the people buying that stock have no idea what they're buying. And here's the thing, guys. Supermicro, they make metal boxes. That's what they do. They make server racks. All right, maybe it's a little bit more complicated than that. It's a very nice box. Maybe it's a really nice shelf that somebody else's technology goes on. But have you listened to Charles Lang talk? Have you heard what that guy says? Have you read about his history of accounting fraud? And that stock rallies on a day when they are announcing that they're diluting their shareholders. The market is drunk, all right? And there's no point in trying to reason with a drunken person. You can only minimize the damage they do and get out of their way, and that's been my approach. That will remain my approach. Meanwhile, over in Argentina, a lot of news out of Argentina, their first budget surplus since 2012. Guys, it can be done. We have now proven it is, in fact, possible to cut government spending. It's amazing. All these stupid speeches. Think about all the dumb things we've heard from politicians in the last few years. My plan cuts the deficit by 90% over the next 25 years. The Congressional Budget Office said A, B, C, D, E. All of this crap, and yet the debt only gets bigger. The deficits only ever get bigger. Javier Milei comes in a month. They've got a budget surplus, a almost $600 million budget surplus, which is a lot of money for Argentina. Now, there are drawbacks to that. Argentina's economic activity is in sharp decline because government spending is the economy in Argentina under the Keynesian and the modern monetary theorists that were running things there. So when you cut government spending, your economy shrinks. Of course, that is the drawback to cutting spending. Now, it remains to be seen whether the Argentinian people have a stomach for this because, as my moderator Mish pointed out in the phone call this morning, austerity always sounds great until it shows up in your own backyard. When you find out austerity means the free stuff you're getting goes away, well, people tend to sing a different tune. No, austerity for thee, free stuff for me. That's usually how it goes with most people. And that's one of the reasons why politically spending cuts just never, ever happen in the United States. But right now they're happening in Argentina, and all I got to say to that is Viva Libertad carajo. Job well done to Mr. Milei. A couple other stories going on this morning. Nvidia closing in on a $2 trillion market cap. They'll probably hit that on the opening bell. Why? Because numbers go up. Little tease, guys, I'm working on something on Nvidia right now. I think you're going to find pretty interesting when I get that one up. I'm not going to give away too much, but I found something. I had a little bit of help from a couple of other folks who found something. I've been developing on that, and it's pretty bad. It's not pretty bad. It's really, really bad. And I am going slow, dotting I's and crossing T's on this one, because if you thought I sounded like a nut on the CoreWeave story, oh boy, when you hear this one, let's just say there's going to be a lot of links. There's going to be a lot of evidence. A lot of support is going to be for this one, because I'm going to sound like a nut, but I just have to show you what I found. You're going to have to wait a few days. Probably going to have to work on that one all weekend. I hope to have it out by Monday, but more to come on that topic. What else we got? Block, formerly known as Square. That's Jack Dorsey's fintech startup. They are soaring this morning on strong guidance. Also, there's a catch to that one. Block may have been up to no good. You guys may have noticed down in the comments, if you've been on this channel for a while, every now and then there's some person pretending to be me saying, cash at me, bruh, for my free investing course, which I will never do, by the way. I'll never ask anybody to send me anything in the comments or give you a link to click on in the comments. If I tell somebody to email, I'll tell you to go to the About Me page on my channel where you can prove you're not a robot, and then you can get my email address there. That is the only time I will ever tell somebody to email me. I'll never send you to Telegram or Cash App. Well, Cash App has Block has a problem with Cash App right now. Whistleblowers are saying that they are intentionally lax on their KYC laws, enabling criminals. Regulators are investigating. That caused that stock to sell off big last Friday. It's getting back some of that today on soaring guidance. Carvana stock is up high double digits right now, almost 30% the last time I looked. There's a good old-fashioned short squeeze going on at Carvana. The company is still losing money. It's still not profitable. They're definitely not out of the woods. But the short interest in that one was just so high that the stock is soaring right now on reporting EBITDA that was a little bit okay. It wasn't a good quarter by any measure. All their numbers were down, but the EBITDA looked a little bit okay. Earnings before interest, taxes, depreciation, all that stuff. Carvana stock is soaring today. So much going on, so little time. Let's shrink my little big melon of a head and let's go through markets. Guys, don't forget that like button and the subscribe button with the notification bell right next to it. If you're new here, subscribe. We do this every morning, so have your coffee with the melon heads. And the market is back into extreme greed. 79 on the CN Fear Greed Index. We've been in the 70s for about 2.5 months now. Market is getting frothy. Right now, the S&P 500 is heading up again ahead of the opening bell. We are up, it looks like 12 points, about 0.25% higher. That's after big gains yesterday. The S&P is up another 77 points this morning, or 0.2% higher as well. And check out the NASDAQ, up 36 points. That's after rising 460 points yesterday. Yes, the NASDAQ is now up another 36, or 0.2% higher. Number go up. DXY is a little bit lower right now, 103.83. That's down by 13 basis points this morning. Looking over at the bond market, we got a mixed bag, some red, some green. Not a lot of movement in either direction. The 30-year is down 0.5 point, 4.456. The 10-year, 4.322. That's down about 0.3 points. The 2-year is at 4.720. That is up 0.5 point. And the 1 month is at 5.399, up about 0.5 point this morning. Looking over at the commodities board, April gold futures, $2,034. That's up $4.15, 0.2% higher this morning. It's March silver futures, $22.74. That's down about a nickel, or 0.25%. Platinum is up 80 cents. Palladium is up $1.83. That's both a fraction of 1%. And crude oil is at $77.27 for April WTI futures. That's down $1.30 this morning, or 1.7% lower. And checking in on Bitcoin, we are at $50,937 on Bitcoin. That's down about $300 this morning. You can see here, if we zoom in a little bit, we definitely rejected that 52,000 level, and now we are heading lower a couple of days in a row. So it looks like Bitcoin needs to consolidate before it tries to make another run at that 52,000 level. We still got that halving coming up in about 2 months. And here's the top story this morning. Top Fed officials bolster case for patient stance on rate cuts. And, well, the market just doesn't care. Nobody heard this one yesterday, even though three different Fed governors, Jefferson, Cook, and Waller, were all out there saying March ain't happening. The market just didn't hear it. All they heard was Nvidia. Three top Federal Reserve officials hammered home the message Thursday that the U.S. Central Bank is still on track to cut interest rates this year, just not anytime soon. Fed Vice Chair Philip Jefferson and Governor Lisa Cook said they're optimistic inflation is still cooling despite a blip in January. Is that what that was? That was a blip. Okay. Never mind the blip on your screen. But they made clear that they want more evidence it's headed back to their 2% target before lowering borrowing costs. At some point, as we gain greater confidence that disinflation is ongoing and sustainable, that changing outlook will warrant a change in the policy rate, Cook said at an event at Princeton University. You notice they'll say they need confidence that disinflation is ongoing and sustainable. They didn't say they want inflation to stop. They just said they want slightly less inflation. They still want that 2% target. And now we've gone from we need to get back to our 2% target to we need confidence that disinflation is ongoing and sustainable. A little bit of a moving of the goalpost here with the language. Now, Jefferson agreed that rate cuts this year are likely, but said officials need to be on guard against reducing them too much in response to easing price pressures. Excessive easing can lead to a stalling or a reversal in progress in restoring price stability, he said in a speech at the Peterson Institute for International Economics. Speaking later on Thursday, Governor Christopher Waller said January's jump in consumer prices warrants caution in deciding when to start cutting rates, though he still expects reductions to begin later this year. The strength of the economy and the recent data we've received on inflation means it is appropriate to be patient, careful, methodical, deliberative. Pick your favorite synonym, Waller said at a speech in Minneapolis. Whatever word you pick, they all translate to one idea. What's the rush? In other words, rate cuts ain't coming in March. And check out CME futures, guys. That is plain as day on this one. This is the likelihood of what the Fed funds rate will be coming out of the March Fed meeting. And there's a 97.5% likelihood that rates will be unchanged in March. Just 2.5% likelihood of a rate cut in March. It's not happening. And now look at the May numbers, guys. Even the May numbers, 79.5% chance of no rate cut, not even in May. A few months ago, guys, it was pretty much like 100% certainty that we'd get the first cut in March. Now we're sitting here saying 80% likely that they don't even move by May. And yet the market is only going higher on this. The market is on autopilot. They're not paying attention to anything. They're just buying. It's not going to end well. And now finally you get to June before you get a majority saying 52.4% likelihood of that first 25 basis point cut happening in June. That seems to be the majority opinion right now. You also have slight chance, 12.5% likelihood of two rate cuts or 50 basis points of cuts by June. But still, there's about 34.6, about a 1/3 probability that even by June, we don't get any rate cuts. So the market needs to reprice its expectations for rate cuts. The Fed was out there saying it yesterday, but nobody cared because of Nvidia. Now, let's talk about this one. I saw this chart this morning. This was posted by Charles Payne from Fox Business, and this is a chart from Isabel Net. They are showing in purple, that is the S&P 500 index, and then in orange, that's showing the truck tonnage index. Now, the truck tonnage index is kind of interesting. This is based off of 2015 total tonnage of cargo that moved on trucks in the United States. A reading of 100 would be what the level of tonnage was in 2015. So if it's 101, it means we're moving more than we were moving in 2015. If it's 99, we were moving less than 2015. Now, what you can see here is starting pretty clearly in late 2019, noticeably before the pandemic started. All of a sudden, we got a big deviation in these two charts. They started moving in opposite directions. We had the truck tonnage on America's highways started to go flat, even trend down, even though the S&P 500 index started what would end up being the largest bull run in history. So what is this telling us, guys? This is telling us why we have such a deviation between the S&P 500, between the Nvidia bros and number go up, and between the the vibe session, this stupid idea that, oh, the economy is really super strong, but everybody just has bad vibes. Why? I don't know, because of some guy on the internet, whatever. No, this chart is telling us what's going on, that this run in the stock market is fake because there's no underlying economic activity supporting it. There is no stuff moving. Now, this run in the S&P 500, it is all tech stocks. It is all financialization. It is all derivatives. It's fake. It's digital things moving back and forth on spreadsheets. At the end of the day, there is no real prosperity behind any of this crap because there's no stuff moving. If life was getting better, if the economy was growing, if everybody was prospering, they'd be buying shit. It would be going on trucks. It would be leaving factories, arriving at stores, and then getting bought, put in a bag, and going home with people. It's not happening. It's down from 2019 levels. This is two different economies here. This is your bad economic vibes. It's not shitty opinions. It's the truth. There is no real economic activity behind any of this. It is government debt and deficit spending. It's tech market bubbles. At the end of the day, there is nothing going on a truck. And these two lines are going to correct. They're going to snap back. What are the odds? Do you think the orange line is going to snap way up? Or do you think the purple line is going to snap way down? Or maybe some combination of the two. Let me know in the comments what you guys think. But I thought this chart was excellent this morning. Also going on this morning, block shares surge after results beat analyst estimates. The estimates weren't really that good. But block shares surged after the payments company reported results and first quarter expectations that exceeded analyst estimates. The firm, headed by Jack Dorsey, includes a number of different businesses, such as household names Cash App, which I will never tell you to use in the comments, and Square, and has also, they own a buy now, pay later firm called Afterpay. We talked all about how buy now, pay later went nuts in the Christmas shopping season. Revenue from Cash App rose 31% from a year earlier to $3.91 billion. That was topping analyst estimates. However, whistleblowers recently alleged that Cash App didn't adequately conduct due diligence on customers. Claims U.S. regulators are now probing, according to NBC. That story came out Friday, and block shares were getting crushed on Friday on news of this whistleblower report. There's also been a short-selling firm. I forget who it was that did a short report on this same issue. Was it Hindenburg Research? I think it was Hindenburg Research put it out last year, basically saying Cash App was a hotbed of fraud and money laundering, and that Block was intentionally looking the other way to keep their numbers going up. Now you've got company whistleblowers saying the same thing, and investigators are actually digging into it. Additional regulation could impact Block, as the U.S. Consumer Financial Protection Bureau proposed in November, treating companies that offer digital wallets more like banks. States have also put forward potential rules to rein in buy now, pay later providers such as Afterpay. Holiday spending fueled Square and Afterpay transactions over Black Friday and Cyber Monday, increasing them by 14% from a year earlier, the firm said at the time. And those buy now, pay later loans, I did a video about that a couple of weeks ago. That is just a hotbed of toxic sludge. It's all being packed up into bonds. It's being rubber stamped, AAA rated, and it's being sold to income ETFs. Watch out for this buy now, pay later trend, guys. This is going to go down in history as a big, big mistake. But for now, block shares are rallying like blazes, up 18%. It was up a lot more than that a few minutes ago. Currently trading at $80.39. Now, this is a 5-day chart I have shown on screen for Block here, and you can see the tanking of shares that happened late Thursday into Friday on the news of that whistleblower report, and the stock continued to trade lower all week, but now getting a nice pop off of those earnings this morning. So we will keep an eye on Block. And here is my favorite story today. Argentina sees first monthly budget surplus in 12 years. It is possible. You can do it. Governments around the world take note. The Argentine government in January saw its first monthly budget surplus in nearly 12 years as new President Javier Milei continues to push for strong spending cuts, the economy ministry announced. January was the first full month in office for Milei, a far-right libertarian. Anybody who's not far left is automatically far-right, by the way. A far-right libertarian who took office in December, and it ended with a positive balance for public sector finances of $589 million at the official exchange rate, the government said late Friday. The figure includes payment of interest on the public debt. It's the first monthly financial surplus since August of 2012 and the first surplus for a January since 2011, the economy ministry said, according to official Telam news agency. 1 month in office. 1 month in office, and this government has swung to a surplus. It is possible. It can be done. It's amazing. I mean, it's like the laws of physics apparently say governments can never reduce spending. Javier Milei just did it in a month. In 1 month. Pay attention, libertarians. It can be done. Now, there is a flip side to that coin. It's not all unicorns and rainbows because, well, when you cut spending, the people you are spending that money on or the things you are sending that money to no longer getting that money. And so we've also got this one. Argentina economic activity slid more than expected as Milei took office, as the press attempts to paint him as a radical and a nut because the Keynesians rule the world and they own the press. And so they're going to say things like this. Argentina's economic activity slid a larger than expected 4.5% in December from a year earlier, the country's statistics agency said on Thursday, underscoring the challenge for Libertarian President Javier Milei, who took office that month. The result was significantly weaker than the 2.3% drop forecast by analysts polled by Reuters ahead of the data. Milei, a right-wing outsider who has pledged to slash state spending to overturn a deep fiscal deficit, was inaugurated on December 10th. Argentina's economic activity was down 3.1% in December versus a month earlier and slid 1.6% in the full year of 23. In the month, fishing, farming, and mining activity was up, but outweighed by falls in manufacturing, finance, and retail. So a tale of two headlines here, guys, depending on your, I guess, political preferences. There are two ways you could look at this story. Argentina sees first monthly budget surplus in 12 years, a country plagued by money printing and reckless government debt in 1 month has swung to a surplus, or Argentina's economic activity slid more than expected as Milei took office because, well, government spending is part of GDP, and when you reduce government spending, GDP goes down. But in the long run, I think reducing government spending will lead to a healthier economy and ultimately economic growth. The question is, can the political winds stay favorable to Milei long enough to pull this off? But look, the guy's only been in office for a month. And so far, he's following through on some of those chainsaw pledges. Now, campaigning and governing are two totally different things, as we often learn. But for now, he seems to be doing what he said he was going to do. But I know there's a lot of guys out there who say, oh, he's a WEF plant, he's a Manchurian candidate, or all this stuff. Look, the guy swung to a budget surplus in 1 month. Take the win, libertarians. Take the win. That is the only message I have for you. And in tales of ridiculous, Nvidia nears $2 trillion valuation on insatiable AI chip demand. And we're going to talk a little bit about some of that insatiable AI chip demand when I release my video in a couple of days. Still working on this one. Let's talk about this one real quick. It took Nvidia 24 years as a public company for its valuation to reach the rarefied air of $1 trillion. Thanks to the chipmaker's role in powering the AI revolution, the company is now closing in on adding a second trillion in just 8 months. Nothing wrong with that, right? 24 years to get to 1 trillion, 8 months to go to 2. Seems totally organic, sustainable, right? Natural, definitely nothing all above board, right? Oh boy, wait until you guys see this stuff. A whole new industry is being formed, and that's driving our growth, said CEO Jensen Huang on the company's earnings call. Nvidia on Wednesday reported quarterly sales of $22.1 billion and forecasts another $24 billion for its current quarter, each more than triple what was posted a year earlier and ahead of Wall Street's bullish expectations. The results lifted Nvidia shares Thursday to their highest ever close of $785, valuing the company at $1.96 trillion. The stock has jumped 59% so far this year. It's only February after more than tripling in 2023. And, those are rookie numbers. You got to bump those up because it is trading at $807 pre-market right now, over a $2 trillion market cap, up another 2.85%. Why? Because Nvidia. That's why. Well, guys, all I can say is I found some things going on around this company, maybe not necessarily in this company, but around this company that say maybe this is too good to be true. If it seems too good to be true, just FOMO in the calls, right? That's what you do. Just buy out. No. Anyways. And Also ridiculous. Look at this yesterday, guys. Super microcomputer. On the day they announced they were diluting shareholders with their convertible notes, the stock rose 32.87%, almost 33% on a day they dilute shareholders. So this is super microcomputer shareholders saying, I don't understand how stock in companies works. I'm just buying anyway. Because when you have the same company and there's more stock, you didn't just make any money. You just diluted the value of the existing stock. The stock that you already owned is now worth a smaller piece of the company. In other words, it's supposed to go down when you get diluted, not up. That's not good news when you get diluted. Try telling that to the SMCI guys. Oh, my number go up. I just bought calls. I spent my kid's college fund on calls in a company that makes metal boxes run by a guy with a documented history of accounting fraud. What's the worst thing that could happen? Good luck. All I can do is try to warn people. That's all I can do. Good luck, everybody. Carvana shares surge as used car retailer profits top estimates. Adjusted EBITDA in the fourth quarter beat as revenue fell short. Carvana topped Wall Street profit expectations in the final months of 2023 and said it expects improved earnings this quarter, sending its shares up as the used car retailer defies the challenges of high interest rates and inflation. Adjusted earnings before interest, which is a big one for Carvana, taxes, depreciation, and amortization were $60 million in the fourth quarter, the company said in the Thursday statement. Analysts had expected about 58.6, and well, that was enough to kick off a monster squeeze in the company. But guys, look, there's a comment right here. They're talking about they're giving themselves a chance to get through the pricing disruption in the marketplace. That's according to Freedom Capital Markets analyst Mike Ward. But they're still burning too much cash. He expects the company to go through $1.7 billion this year and next. In other words, this company still doesn't make money. They're selling fewer cars. Their volume is down. Their earnings are down. They're still losing money. Their debt is getting smaller. I would admit their debt is getting smaller. They're cutting headcount. So they're taking steps to stop the bleeding. But at the end of the day, this is still not a profitable company. Go figure, giant towers that are actually vending machines for cars isn't a particularly profitable business. What if your car gets stuck? Do you kick the tower and does it just come falling out the bottom when that happens? Do you start shaking the tower from the top and eventually your car will be jarred loose? Is that how that works? I don't know. But look at Carvana stock this morning, up 28.8, 28.9, almost 29% this morning on news of, again, swinging to a loss. This is a short squeeze, guy. There's the short interest in this company was just obscenely high. They reported not terrible news. It wasn't good news, but it was not terrible news. And that not terrible news was enough to get people to cover their shorts. Enough people get covering their shorts. Now people have to cover their shorts because they're getting margin called. And you end up with a 28% move in an otherwise dead stock, currently trading at $67.40 ahead of the opening bell. So there is plenty going on in the world of finance this morning. And I just want to say thank you very much to Mr. Wank. Did he just want to say wank, or was there a message in there, Wank? I didn't get a text from anybody else. Well, thank you, Mr. Wank. I appreciate, sir, very much the super chat, the support of the channel. And I guess he just wanted me to say wank on the air. Well, I said it like 4 times, wank. And thank you, M&J, for gifting 5 channel memberships. I appreciate that very much. If you guys are the recipient of one of those gifted memberships from M&J, be sure to say thank you to her. And thank you, Cole Marsh says, happy Friday. Thanks for all you do for all of us. Much love and respect. Right back at you, Cole, sir. I appreciate the support of the channel and the kind words. Thank you for being with us since the beginning, by the way. I know, Cole, you have been here since the early days of the single-digit subscribers on this channel. And what's up, Vegas Schmitty? Thank you, sir. He says, is Block's surprise profitability due to Afterpay transactions? If so, no bueno for the economy. Schmitty, you are right on the money. Those buy now, pay later loans, I'll be honest with you, they scare the crap out of me. They're not that big. Let me just say that. I mean, it's in the tens of billions, so I guess not that big is a relative term. In the context of an era when the Fed prints trillions, tens of billions in buy now, pay later loans isn't that big. But what does worry me about BNPL loans is the fact that they're basically free. They don't look at you. They don't run any credit checks or anything. They're just like, oh, you get a loan, you get a loan, you get a loan. They're not secured by anything. They're not going to come repossess your groceries if you don't pay your buy now, pay later loans. So there's really nothing forcing people to pay. It's just moral hazard. It's people helping themselves to free stuff. And, well, the companies that are making the loans, first of all, I looked at, you have Cross River Bank from Fort Lee, New Jersey, which is just the scummiest bank in the country. They'll make a loan to anybody because they don't intend to stick around long enough to find out if they're going to pay it back or not. They just sell it right away. They're doing a lot of these with a firm. I don't know who's underwriting the loans for Block. It's probably Cross River or somebody like them. They're taking all those loans and they're packaging them up into asset-backed securities, and they're selling them to income ETFs. And income ETFs are usually bought by older folks who are looking for fixed income and low risk. And they're not getting low risk. This is the most high-risk, toxic, dog shit debt you could possibly buy. And it's being sold to income ETFs. It's not going to end well when these things all start going belly up, when they realize nobody's going to pay these things, because these are the same people that aren't paying their student loans that are taking out these buy now, pay later loans. What makes anybody think they're suddenly going to start paying their debts back? They won't. Not going to end well. I agree with you, Schmitty. Thank you very much, sir, for the super chat, the support of the channel. M&J, 5 more memberships. Thank you, M&J. I appreciate that very much. And thank you to all my channel members, all my melonheads and magnanimous melonheads out there. I appreciate you guys very much. And Neil is saying by silver, platinum, and osmium. There's that osmium mention again. All right, Neil, I got one for you today because I thought you might show up, and I did see an article that reminded me of you. Sibanya, I don't know how to pronounce this one, sheds 2,600 jobs at South African platinum mines. Consultation with labor unions not going so well. They are laying people off. The miners are in trouble here, guys. I'm seeing the same thing with silver miners, really underperforming, even though the underlying metal isn't doing that poorly. It's actually doing pretty well, but labor costs are rising, inflation, all the operating costs are up. Be careful, all you guys who are holding mining stocks here. I'm not sure what's really going on there, but it looks like the miners, to be profitable, need a big move in the metal. And unfortunately, I don't think we get a big move in the metal until we get a big loss of the population of miners. In other words, they go bankrupt and go belly up. And so they start producing less metal, and then that less metal being produced, eventually you get the metal prices higher. So you guys who are playing in mining stocks, watch out for those companies with big debt loads. Watch out for those rising interest rates. Watch out for companies that are involved in labor disputes with rising labor costs. Miners are in trouble. But thank you very much, Neil. Appreciate the super chat, the support of the channel, sir. You are a gentleman and a scholar. And thank you, everybody, for having your coffee with the Melonheads this morning. I hope you guys have an awesome day. Just a reminder, I'll be back this afternoon for my weekly wrap-up live stream at 3:15 p.m. Eastern Time. Looking forward to seeing you guys for that one. Thank you to all my Melonhead channel members and my magnanimous Melonheads on Patreon and on YouTube. Links down below to all that good stuff. Hi, Mom. Hi, Dad. Love you guys. Till next time, live small and dream big.